I think it's going to happen. And even Jamie Dimon, if Jamie Dimon says that it happened, if Jamie Dimon wants it, then Jamie Dimon gets it.
He gets it,
right?
yeah.
As soon as Jamie Dimon went on TV saying Trump's trade policies were bad, Trump changed immediately. So Jamie Dimon gets what Jamie Dimon wants. Jamie Dimon wants SLR exemption. Very simply, a bank borrows at the short end from depositors and lends long. Now, banks don't like to take risk. So I think we have to be flexible in our mental models of what quantitative easing means, what money printing means. Look at the second order and third order effects of, okay, well, if they do this, how do the other market participants react? Do they buy more bonds? Do they move money from a sterilized pool on some central bank balance sheet into the general market, which can be releveraged through the banking system? So we have to be a little bit more, I guess, indirect in our thinking of how the quantity of money changes as Treasury officials all across the world sort of take control from the central banks. Because the central banker says, I want to be independent, I care about the value of the fiat currency, blah, 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 right? And that's what they believe. But the Treasury official says, this government's broke, the politicians want to spend the money, I work for the politicians, therefore I will make sure the government can fund itself at an affordable level.
How are you thinking about Trump's overall policies right now and tariffs, and especially with how it ties into different macro assets?
So I think Trump has been extremely consistent in his overarching goal or message, which is there's a portion of America who believes that they've gotten a raw deal from globalization over the past 50 years since the early 70s when the US went off to the gold standard. And Trump is going to be that politician that's going to speak to this underserved portion of America and bring back America greatness, make America great again, all those political slogans. He's been very consistent in his messaging that, essentially the current account deficit that the US runs, which is in the trillions of dollars every year, has to go to zero. And manufacturing has to come back on shore. The financial system has to change and all these sorts of things. Now, the question is how fast and how hard can he go at these goals? In 2018, he started the trade war with China by restricting semiconductor chips. There is a sort of deal reached between the US and China. Not really much of anything changed. Obviously, Trump lost the next election. But, Biden and the Democrats continued these policies of, hey, America's getting a raw deal. Maybe the rhetoric wasn't as inflammatory as Trump, but, Biden ratcheted up tensions with China and increased the restrictions on semiconductor sales to China, classified them as a strategic competitor and all these sorts of things. So it's a bipartisan effort within the American empire to sort of try to distance themselves or decouple from China, which brings us to this year where, Trump has reinvigorated, won the election, has this mandate, Senate and the House are both Republican. And so, he went with a maximalist position on tariffs, though, worst of all worst cases, no one even thought he would go, to these levels of tariffs. And obviously we saw a complete meltdown in the markets afterwards. And, I guess you can say he fucked around and found out exactly how much pain, America and all the different vested interests could take. And obviously him and his political advisors have to do the political calculus. Okay, well, yes, Trump himself will not be around post 2028, but all the people within his orbit are all angling for their next job, in 2026 or 2028. So obviously they don't want to back policies that are going to not get them reelected in the midterm elections or in the next presidential general election. And obviously I think that moderated in his position. And now we're seeing, concession after concession. First, it was a 90-day pause with everyone except China. Then it was, consumer electronics are exempt. I don't know what he said today about China. I know Bessent was on the tape saying something about, there's a deal to be done. It'll take a long time, but we're ready to negotiate with China. I'm not sure exactly what he said at this press conference, but it goes with the theme of the American financial system is so highly levered that it couldn't take 1 week of Trump's maximalist position on tariffs. And some people might say that, this tariff thing is a good thing, that America returns to a balanced budget and, brings back manufacturing jobs and all that kind of stuff. It doesn't really matter what you think of it's good or bad, but all that matters is 1 week, bond market collapsed, equity market was collapsing, and they change their tune, and they're continuing to change their tune as sort of the volatility doesn't subside as much as they would like. And so I think it's just we're traversing along this trend. I think we've seen the market bottom, and especially Bitcoin, probably in stocks as well, as the leverage is too great. They can't go as fast as they want. Money will be printed.
Yeah, that always feels like the point of tension between, yeah, what can we actually get done versus how much can the financial system hold in terms of the strain involved in us. Obviously, yeah, when we got the 30-year passing 5% yield, that was starting to be more evident of the maximum amount of pain and uncertainty that it can hold. And we've seen that, yeah, ratcheting back. So I want to double click down into, you've had some interesting insights on the reflection and how China is thinking about this all right now, and how does that get reflected in their currency, and where they try to fix that. So I have two questions I want to ask you here. One is, what do you think is the goal in terms of this tariff approach on the US's allies, notably like Europe and Canada and Mexico? Is it trying to go hard up front to try to, consolidate these trade deals all together and get the Western countries all aligned to go after and isolate China? And then also, yeah, what's your thesis on the end game here in terms of China, and especially in terms of their reaction function, in terms of how do they navigate managing their currencies? Because you've had some really interesting insights around that.
U.S. Treasury Secretary Besson has been quite clear, at least in his mind. The strategy is, okay, let's get together all the good people and those aligned with Western values, blah, blah, blah. And we're going to present this united front to China, which I guess kind of makes sense because, we saw what happened when the U.S. tried to restrict exports from China to come into the U.S. market. Then China said, okay, Mexico, Vietnam, Thailand, Malaysia, we'll figure out a way to get the stuff through you onto the U.S. And, nothing really changed. So if they really want to have this chimerica divorce, then the U.S. has to co-opt these allies into, taking pain themselves by trying to restrict or make Chinese intermediate goods more expensive. Who knows whether that'll be successful or not. On the Chinese side, they have a different reaction function, more so because if you think, read enough Chinese history back, the many thousands of years that the Chinese civilization has existed, obviously the Chinese people and the Communist Party rhetoric is very clear on this, view the last 100 or so years as the century of humiliation. Between the fall of the Qing dynasty, then obviously you had the Civil War from 1931 to 1949, and then you had sort of the 70s and 80s when under Mao, when China was trying to struggle to industrialize. And the key sort of things that Chinese people take away from that is, on a big front was tariffs and trade, right? You had the United Kingdom forcing drugs down the throat of China because they needed the hard currency. And so you basically addicted 10% of the Chinese population to opium so that the balance of trade would work for the United Kingdom. And then you had all the other Western powers coming in and dictating tariff treaties, usually out of the port of Shanghai. And this was to the detriment of the Chinese state. And they look very poorly on that period of history. And so when you have a very aggressive and bellicose Trump stating that China must kneel down, kiss the ring, and do what needs to be done so that America is great again, you can understand why Xi Jinping domestically cannot agree to anything like that, because the whole point of the Chinese Communist Party is to rejuvenate China, return it back to its glory days when it was the largest economy in the world, the most sophisticated and advanced, meritocratic civil service, all these sorts of things. And so for him to sit up there and just take that diatribe from Trump not only makes him look weak domestically, makes him look weak amongst all the Asian countries, which used to be vassals of China during imperial times. So again, I don't think that China can come to a deal, or a deal to the magnitude that is necessary to rebalance trade, which leads to, well, then what can they do? Because they're locked in a balance sheet recession and they need to print a bunch of money to solve their own problems internally.
And they also have a lot more time on their side than I would say is like a traditional 4-year election cycle. So they're not in a rush. So if we're in this current situation where there's just this embargo between the two largest economies, How do you think about the effect of that on the global economy? Like, if we take the assumption that the rest of the countries will come to some sort of at least marginal deal on tariffs, but the tension with China remains, can we have that and not have a recession, or is that just sort of part and parcel of it?
So I think at the end of the day, the world needs Chinese cheap goods, cheap and high quality goods, I should say. They're very high quality these days. It's the most advanced manufacturing setup in the world, which is why everyone makes their stuff there. Period. End of statement. There's no debating that. So, okay, so what happens when you make something more expensive, but there is a imperative for lots of parties that still want the good, like illegal drugs in most countries, right? There's a demand. Same thing. There are imports from China that are necessary for every single good in the world. They're cheap and they're high quality. No one else can, even if America completely was successful in this tariff thing, they're not going to have factories to replicate the Chinese ecosystem from, maybe 5, 10, 15, 20 years, right? It took China 30 years to build this situation. So the goods are going to find their way to America at the end of the day. People are going to cheat and do all this sort of things. There might be some secret pathways that are allowed, face-saving measures so that, both sides can claim that no trade is happening. But if you really dig through the details, there's trade happening. It's just more expensive. You just increase the cost of the good, but the good is still going to get there because China is the only one who can make it. Until that's not the case, then these tariffs will be effective in making things more expensive around the world, but ineffective from actually decoupling the world trade ecosystem.
If you're talking about the fact that China needs to print a bunch of money, I assume that leads to positive tailwinds for Bitcoin. Is that right?
For sure. And China's not alone. It's every major economy needs to print a bunch of money to basically cushion the effects of this attempted divorce, this decline in globalization. Yeah, they're going to print money. Bitcoin benefits. Now, the reciprocal of the current account deficit in the U.S. is a financial account surplus. And so all these dollars that got earned, the trillions of dollars that got earned selling stuff to America got recycled into treasury bonds and stocks and, Mag 7, all the big US tech stocks. So mathematically, if Trump is serious about reducing the current account to zero, then foreigners have to sell stocks, period. It's just math. And then the question is, okay, well, can the US government survive financially if there's a big decline in capital gains taxes because the market's not going up? I don't think so. Therefore, we get a printing money function and Bitcoin benefits and finally decouples from tech.
If they do reduce the trade deficit, it means a lot less flows into US dollar denominated assets. At the same time that China's going to print a lot of money. We've already established that. We've already seen some interesting reaction functions from Europe where they're looking to, we've had Germany take off the debt brake and start talking about running a higher fiscal deficit, which is obviously going to be positive for Bitcoin as well. So yeah, like how do we validate this idea of the decoupling? Because obviously, if we just look at market price action for the last couple of weeks of comparing US tech equities, which have just been doing terribly, versus Bitcoin has been holding up really strong. Is that an early signal of this, or how do we validate that?
I think it's an early signal, but we might not get the demonstrative validation that we like because Trump backed off from the maximalist position so quickly. So obviously in the first few days after Liberation Day, stocks crashed, Bitcoin crashed. Okay, stocks just high beta NASDAQ, fits the narrative. Then the yield started ripping as basis trading hedge funds were getting margin called, and people were afraid that there was being an unwind of all these positions and front running that trade. And the market stress started to increase. Move index went to 172 intraday, and Bitcoin started to rally. But then because Trump and the team pivoted so quickly, then we got back to business as usual, and everything just goes up together. To today's press conference, if it's no longer I'm going to file Powell, it's no longer China's a big bad boogeyman, we're going to find a deal, then everything goes up. Bitcoin goes up more, but everything goes up. And so we don't really get a test of this. Is Bitcoin just high beta NASDAQ in the short term? Now, in the long term, I think that US tech exceptionalism as a narrative is dead. There are cheaper ways to do AI. You don't need to spend all this money. There's obviously DeepSeek and some other really cool LLMs coming out of China. We're starting to hear reports from different channel checks on Amazon and Microsoft, and them canceling leases on some of these data centers and whatnot. So again, big US tech spent a bunch of CapEx, just like they did in 2001. And we know what happened to Cisco. We've done 90 something freaking percent. Not to say that Google's going out of business, but I don't see structurally how these companies are going to be the leaders of the next rally. So
Obviously, right now it feels like the big narrative is trying to understand who's really driving this. Is it Powell on one side, who's sitting on his hands and trying to remain resolute and hawkish, versus Secretary Bessent on the Treasury side of things, who is obviously going to be political because he's part of the Trump administration. So I would love to hear, first off, let's dig into the fiscal side of things and what's going on with Treasury Secretary Scott Bessent and some of the signals that we can derive there to understand where's the liquidity backdrop headed, and what levers can be pulled on the fiscal side of things to drive that.
We all were very well trained from 2008 to 2019 that the Fed does QE. It prints money every week. Where's the QE? Stock market goes up, Bitcoin goes up, everything goes up, right? And so post 2020, after the little bit of inflation that the world experienced and every central bank raised rates, the community was like, okay, well, we know QE equals number go up. So where's the QE? And from 2022 until the current moment, Powell really, they cut a few times, but we haven't seen, and quantitative tightening was reduced a bit. And that's left a lot of people saying, oh no, the Fed's being really, really tight, therefore I can't buy risk assets. So I'm going to sit on the sidelines. And now obviously that was the wrong trade, because people forgot about the other side of the equation of what can the Treasury do unilaterally without the Fed. And so we've learned, Yellen, bad girl Yellen, or some staffer at the Treasury Department said, oh, there's $2.5 trillion sitting in this reverse repo program that doesn't really circulate within the economy. How do we get that money to come out of the reverse repo and into these bonds that we need to sell because we have a large deficit? I know we're going to increase the amount of Treasury bills, that is a Treasury debt security with less than 1 year maturity. And if the yield is a few basis points higher than the reverse repo, then the money market fund is going to pull the money out of the reverse repo and put it in the Treasury bill. The Treasury bill gets relevered throughout the system, and therefore liquidity goes up, stock market goes up, right? Now, Powell's over here doing his, I'm a Paul Volcker, impersonation. I'm going to go and keep these monetary conditions tight. I really care about fighting inflation. On the other hand, Yellen just printed $2.5 trillion, but not really printed. It's not technically quantitative easing. And so people get caught up on this, oh, it's not QE, so the market's not going to go up. Yeah, but it still released a $2.5 trillion into the market. And Bitcoin went up 6x in that period of time. So focusing on what Powell is doing was correct in the last cycle, but now it's a Treasury show. They dictate policy. So what do we get out of the new Secretary Bessent's mouth recently? He sat down with a Bloomberg interviewer. I think it was on the April 11th or 12th. And, the interviewer asked him, well, Powell's keeping tight monetary policy. What do you guys have any tools at the Treasury to help market conditions? And he said, I've got plenty of tools, specifically Treasury buybacks. It was increased bills versus bonds under Yellen, stealth quantitative easing. Bessent is going with Treasury buybacks, another form of stealth quantitative easing. Both of these programs require no input from the Fed, no input from Congress. And so I believe that was a seminal moment in sort of this risk off situation. And to me, that this feels like November of 2022, in that there's lots of reasons to hate the market and Bitcoin at that period of time. But if the Treasury is going to print $2.5 trillion, shit's going up. If Scott Bessent is going to do Treasury buybacks till the cows come home, shit's going up. And it has gone up since he made that announcement. They haven't started increasing the pace yet, but they will do, because they can do it without input from the Fed. And so that's kind of where we're at. Eventually the Fed will come around. They've already indicated that, quantitative tightening is tapering. They might do some sort of like balanced runoff for mortgage-backed securities, the maturing mortgage-backed securities. That money is in purchasing fresh new treasuries. So there's lots of things that you can do that aren't quantitative easing, because that's a bad word. The plebs know what quantitative easing is. They know that means inflation. Yeah. You can't do that anymore. You got to be more creative. So I think we have to be flexible in our mental models of what quantitative easing means, what money printing means. Look at the second order and third order effects of, okay, well, if they do this, how do the other market participants react? Do they buy more bonds? Do they move money from a sterilized pool on some central bank balance sheet into the general market, which can be releveraged through the banking system? So we have to be a little bit more, I guess, indirect in our thinking of how the quantity of money changes as treasury officials all across the world sort of take control from the central banks. Because the central banker says, I want to be independent. I care about the value of the fiat currency, blah, 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 right? And that's what they believe. But the treasury official says, this government's broke. The politicians want to spend the money. I work for the politicians. Therefore, I will make sure the government can fund itself at an affordable level.
What I've been thinking a bit about is, okay, well, what if they tried to do some sort of like Operation Twist style thing where they issue bills, but then they buy bonds potentially? Do you see that as potentially being the next step here?
So I think, and this is from me talking to some of my friends who are really in the weeds on, they work at large bond hedge funds. It's what you described the former. So it's, okay, I'm a relative value hedge fund. I've bought an on the run bond and I've sold a bond futures contract waiting for that basis to converge. Obviously, as time passes, the on the run becomes the off the run while I'm waiting for this basis to converge. But once the bond becomes off the run, then my bank says I need more collateral against that repurchase agreement, which means I can do less and less trading or have to reduce my positions. If you can free up balance sheets so that these RV hedge funds can increase the amount of bonds they can buy, then they can act as the marginal buyer of debt as he continues to increase the issuance of debt going forward. And again, it's because the off the run bond is more illiquid and therefore carries a higher capital charge, higher margin requirement. And so by alleviating the system of this supply and possibly even pushing off the run bonds into a premium, then these RV hedge funds can facilitate more buying on the margin of the increased issuance of treasury debt.
He doesn't even need to, do the twist style thing. It's just the fact of ramping up the, swapping the off the runs for the on runs. That's enough to make for this meaningful increase in the marginal buyer debt. Correct?
Correct. And we know that the debt, I believe that in his next quarterly refunding announcement, which should come out on, I think, May 1st, next week, Bessa will announce that he needs to borrow more than the market thinks, mainly because, as you mentioned in the outset, Elon Musk Doge, I think I read a New York Times article. He said he was going to do $1 trillion. He thinks it's going to be more like 150 billion in terms of cuts. Tax receipts might come in a bit light because of capital gains receipts. Taxes are low because the market's been tanking. And government outlays continue apace because of the structural, Social Security, defense, all these sort of things that you continue to have to spend money on. Plus, you have Trump tax cut. Bessa's going to have to issue more bonds. The market's not going to like it. He needs someone to step up and buy these things. Their RV hedge funds are there. They just need more capacity on the bank balance sheets. This buyback program, if done in sufficient size, gives them the ability to buy more bonds. And because the purchasing of bonds doesn't come from actual savings, it's stimulative. It's, the government is printing money to do stuff, goods and services, which will increase the amount of credit money in the system, which increases the quantity of money, and Bitcoin responds positively to that.
So if you have, Doge going from $1 trillion to 150 billion, negligible at this point, increased deficits, tax cuts. You have Scott Bessent, who was a huge critic of what Yellen was doing, but is looking more likely like he's going to repeat the same things of just, keeping the party going in some form or another.
Absolutely. I mean, maybe in 20 or 30 years, there's some, massive change in global architecture. But for whatever reason, the Trump administration couldn't take the pain to pursue this maximalist position in quickly reversing the current account deficit. Probably because people are like, I can't get reelected if I do this, and that's just the math, unfortunately.
But I believe you're of the mind that regardless of what he says there, some form of QE needs to happen. So how are you thinking about Powell and the Fed right now?
They're reactive to the market. And let's go back to 2023, the Silicon Valley Bank banking crisis. 3 banks failed in 2 weeks. And we had the Bank Term Funding Program released overnight between Powell and Yellen. Powell is supposedly supposed to be tightening monetary supply. If you look at the week after they announced this program, their balance sheet blew up by $400 billion, right? So quantitative tightening happens as long as there's nothing wrong going on in the market. As soon as something is fucking up, the Fed is right there ready to do what they need to do. right? You got Susan Collins in the Financial Times, during the heat of the tariff tantrum, saying the Fed stands ready to do what is necessary to keep the market functioning. What does that mean? The Fed stands ready to create some alphabet letter gobbledygook that isn't Q and E that prints money. That's what it is. And so I think people are getting too hung up on the words. Just look at the actions. Every time bond market volatility spikes, the Fed does something. It might not be QE in the traditional form of what we believe QE is, but they have so many other tools. They have supplemental leverage ratio. They have, how fast they're going to do quantitative tightening. They have other sorts of Basel III implementation things that can slow down or completely cancel in the banking system. So they have a lot of these tools that the uninitiated public would not consider money printing that lead to the same outcome.
Suddenly, there's a lot of talk about SLR exemption. What's your read on that? And what are the implications of that? How does it work?
I think it's going to happen. And even Jamie Dimon, if Jamie Dimon says that it happened, if Jamie Dimon wants it, then Jamie Dimon gets it.
He gets it,
right?
Yeah.
As soon as Jamie Dimon went on TV saying Trump's trade policies were bad, Trump changed immediately. So Jamie Dimon gets what Jamie Dimon wants. Jamie Dimon wants SLR exemption. Very simply, a bank borrows at the short end from depositors and lends long. Now, banks don't like to take risk. So if I can borrow cheaply, if I'm a too big to fail bank, and I essentially have, my deposit rates are much lower than where the treasury market rates are, I borrow short and I just go buy government debt. Whereas if I had a personal loan or a car loan or a corporate debt, I have an equity charge. It costs me money to originate that loan. I have to put some of my own skin in the game. But it's the U.S. government says no more skin in the game. You can buy as much of the stuff as you want. The banks want SLR because they're going to make a fuck ton of money doing this. And the banks are going to get it because at the end of the day, if Trump is serious about this divorce of trade where the U.S. Treasury bond no longer is the global reserve asset, then who's going to buy this stuff? The banking system is the only person who can buy it, especially if the Fed is doing quantitative tightening or not doing QE to the level at which is necessary to mop up all of the supply of debt being issued. And it certainly isn't going to be the private sector because they spend all their COVID money on cars and washing machines. Everyone's fucking broke.
I'm just curious, how do you think is the catalyst factor here? Is it just yields being too high, or is it like an actual, some esoteric part of the monetary plumbing world going no bid and seizing up? How do you think about all of that?
I mean, the most obvious one, but not necessarily going to be the most likely, is carry trade unwind out of Japan. So obviously, Japan is a staunch ally of the U.S. They do whatever they're told. And if a weak dollar is necessary so that, the U.S. can reindustrialize, Japan is the largest holder of treasury debt. It's not China, it's Japan. So, and the yen is weak. They keep it weak. The BOJ has been printing money for 30 years. When the yen strengthens, people have to unwind these assets. They have to sell stuff. They have to sell bonds. Trump wants a weaker dollar, so the yen has to strengthen. Well, if the yen is strengthening and the BOJ is raising rates, they have a Japanese person who's borrowed yen to buy stocks or bonds or whatever. I have to sell it and cover immediately because I'm about to lose money. Or if I'm a Japanese person, now I can buy a Japanese government bond and it yields enough so that I don't have to take that FX risk and go into treasuries. And so this is the unwind of Japan Inc.'s massive carry trade position as a country is probably the biggest risk to the biggest catalyst to the resumption of QE and explicit yield curve control. Because if Japan is going to repatriate the trillions of dollars of capital, most specifically in the United States, then they're going to have some accommodation from the Fed and the Treasury to make sure they don't blow up the U.S. financial system.
I don't think it's a coincidence that the first place Scott Bessent is going to negotiate on trade is Japan. And, if we lose at 140 level, for example, that's going to have some pretty significant impacts on yields. So do you think they're thinking about this in terms of, okay, if we get some sort of, currency agreement where we strengthen the yen, there needs to be that other side of the impulse, which covers the yield side of things, or else this thing just all blows up?
Absolutely. And they already have the tools, right? There's central bank swaps. The Fed can essentially print infinite amounts of money, hand it to the BOJ, and the BOJ can basically take these bonds off the private sector and warehouse them. And again, it's not considered quantitative easing per se, because it's not the technical definition of it. how the general layperson understands it. And so people would be oblivious to exactly why is the market going up? Why is my coffee? Why is a coconut water $20 now? I thought they weren't printing money. No, they are printing money. It's just in a way that you don't understand.
What do you think has been driving gold so much? And how do you think about that in contrast to the digital version, i.e., Bitcoin?
It was February 2022 when the Biden administration decided to steal Russia's assets and freeze them. And then Trump rolled out these maximalist tariffs on everything except for gold and some commodities, which is tell in terms of where the system's going. So if you're a central bank manager or some sort of sovereign wealth individual and you've got all these dollars coming in, do you want to make the problem worse of owning these treasuries that you can't sell? The liquidity has declined. If you piss off the president, they sanction you and you no longer have access to your money. Do you want to keep buying that? Or do you want to buy gold, which has always been for 10,000 years, sort of this neutral, stateless asset where people save energy for human civilization? Well, I want to buy more gold. And that's what they've been doing. Central banks around the world, especially in the global south and current account surplus countries, have been increasing their purchases of gold. Obviously, China's doing so. Other countries as well. Even like Poland and the EU, they have an explicit target. They want to bring it up to something like, I don't know, 15 or 20% of their central bank reserves. So everybody understands that treasuries are no longer a risk-free asset. Yes, U.S. government can print nominal dollars to pay you back. That's if they want to pay you back. If you're Russia, they don't want to pay you back. If there's a research piece by some Deutsche Bank strategists a few weeks ago stating that, could the Trump administration refuse to renew dollar swap lines and cripple the EU because they didn't do something he wanted them to do? Right? Again, that's just another part and parcel of a treasury bond is not risk-free. There is risk. You have to start asking yourself, what if? And when you start asking yourself, what if, then you might as well own gold.